I know a lot of us these days trade with the prop firm, and for a good reason, but please, if you've got a funded account or you're in the process of getting there, let's not blow it by sizing up too fast, not having risk management. Let's try to be a little more strategic here. Does this scenario sound familiar? You get funded, you spend all this time to get funded, or maybe you don't spend all this time to get funded, you do it in like, a day or two. You hit a payout, you hit a second payout, and then you blow the account. Our goal is to trade, collect our profits when they're available, and then take the payouts and move on with our lives. Like, it's simple as that. The prop firm can help us do that without having to risk a lot of our own money or put our own capital up to go ahead and do so. But if we lose our accounts because we're a bit reckless or we don't have a scaling plan or strategy in place, it's our fault, A, but it's unfortunate because what it took to get there was likely not easy and took a lot of time. Now, I know some of you guys are buying prop firm challenges every single day, so maybe that's not the crowd that I'm necessarily talking to, and it's not going to hit as well with you, but you get the point. I think about it very simply, like risk, reward, and probabilities, just like you think about trading, right? If you actually know how to trade and if you actually get into the game, you understand it's risk, reward, probabilities, win rates. Like, it's simple. Like, it boils down to a couple key things that you got to focus on, and that's it. We've got plenty of videos we've talked about in the past. But if you start doing some shit that increases the chance that you could hit the drawdowns or break the rules or lose the account, what's the point? If you are increasing the chance of that happening in due time, it's probably going to happen at some point. So now this income source or this account you no longer have access to, again, that you worked hard to get. All right, so here's what we're gonna do. 4-step plan, pretty simple, straightforward, write it down if you need to. Step 1, which many of you potentially, if you're watching this video, have already done, or you're in the process. You open an account with a prop firm. You proceed to get funded. Now, this could take a long time, could take a short period of time. It doesn't really matter. It's really up to you. Ultimately, if you're not trading with a consistent strategy for a long period of time, you shouldn't even be trading with a prop firm anyway, because you don't know you're profitable, means you're probably going to blow money. Although people are inevitably going to still do it when they're not profitable, open accounts and spend money. Good chance they're going to blow through a lot of money and eventually quit. Stats, data will tell us that, or they're going to potentially lose less than they would have if they invested all their savings into a brokerage account, which could be good. So it's not it's not necessarily a bad thing, but if you're not profitable yet, but still just use a demo account, get profitable, then move to the prop firm. I got to say that ahead of time because, I mean, it's a given, but people are not going to respect that, and it's obviously step 1 of the equation here. Because if we can't consistently make money, then who cares about scaling up? It doesn't matter because you're going to lose it eventually anyway. So we get funded, not a rush. There's no rush. Like, whenever it happens, okay? Think about this in the span of a year. If it takes you the first couple months of the year, let's say you open an account in January and sometime in March or April, you get funded. Maybe you lose 1 or 2, second or third try is a charm, and boom, you're funded in March. Before we get on to step 2, I will also want to mention that you should be trading a size you're comfortable with. So let's say you open up a 100K account, but you've never traded with that size, or you are someone who has a minimum wage job or something along those lines. Like, you're probably going to be, that dollar amount is probably going to be too high, and you're mentally not going to be able to handle the ups and downs of your P&L. Just something to take into consideration. There is psychology behind that. So let's say you open up a 25K account and you're trading with, winners a couple hundred, losers a couple hundred. Like, that might make more sense for you versus going with the 100K account and your winners being maybe, 1,000 or 2, losers being 1,000. Like, that might be too much. Now, of course, it's really going to come down to every person's unique situation, but don't worry, we have a way to scale this up. It's just trade a size that you're comfortable with initially. It's going to give you a better result likely in the long run. So now we are funded. Step 2, we're going to open a second account with the exact same prop firm. And you don't have to open it with the same prop firm, but ideally you'd open it with the same prop firm. It'll allow for less potential problems later on with step 3, which we'll get to in a second. So you open an account, let's say it's a 25K account. You get funded, you're profitable, great. Next step, you now open up a second account. It could be a 25K, it could be a 50K, maybe even 100K. That could be pushing it because that could be a lot of scaling up, and that could be, it could mess with your mental. So I would recommend the same size or 1 notch higher. So if you're on a 25K, go with the 25K as your second account or a 50K as your second account. Step 3, we're going to connect to a trade copier like Traders Connect. I will leave a link to them down below. From my research and what I have found, they seem to be the best. I'm not necessarily saying that that is the only one. There are other ones out there. They seem to be the best in terms of support, the platform, what they offer, and how they keep you up to date when they do have errors or there's issues or bugs and all that stuff. We're now going to connect both accounts inside our trade copier, for example, Traders Connect. And if we open a second 25K account, we're going to have the sizing 1-to-1, meaning it's going to just simply copy our trades with the exact same sizing as our first or main account on the second account, and we're not going to have to go in and manually place those trades. It's going to just automatically take care of that for us and essentially automatically double our size like that. If we opened a 50K account as our second account, we could have it set to double the size. So the position sizes could be double what we had. If we open a smaller account, we can have the account where we can have the position size be half or whatever the sizing you need to be. And again, this can be played with, but I think this is an approach that mentally can easily be understood, easily handled. You'll notice the P&Ls, they'll be bumping up, yes, overall, but it's not going to be a massive jump, right? If you open up 7 accounts, you could do that. No one's stopping you. It's going to cost more for the copier because you're going to have to pay for all these accounts to be connected in. And your overall P&L is going to be now 7x potentially what it was, which could be a really big jump. And we mentally might not be ready for that. Again, if we can maintain this and slowly build it up, that's going to be better for the longevity of what we're doing here. Step 4, we're going to now trade our main account, our first 25K account, like normal. We're going to do the exact same things. We're going to take the same trades. We're going to go for the same profit targets. We're going to have the same percentages. We're going to do the exact same thing. We're not going to change anything. People say, well, when you get funded, you likely trade your account differently. Why would you do that? Why would you trade your account differently once you get funded? Whatever you did to get there consistently, ideally, right, got you to funding. Don't change that. Keep it going. Make slight adjustments. Do what you have to do to perfect your strategy. You will never perfect it, but improve your strategy over time. But if you're profitable, you just doubled or more your income like that. Curious your thoughts on this. Obviously, there are other ways to go about this. You can even have a scaling plan with the platform you're using, the prop firm itself. They may have a scaling plan. It's probably going to be pretty slow, but I think it's obviously better than if you were to trade a 25K account, get profitable, then jump over to a 100K account, stop trading your 25K account, do the whole combine or do the whole evaluation phase, get funded there, waste all that time and those profits you've been making. And now what you're doing is you're using your first account to now pay you, but as you're consistently profitable and you keep making money, you'll eventually get funded on your second, third, fourth accounts if you want to add more. And now once that's funded, within a few months, you now have 2 accounts, double, triple, 4x, whatever the number is, your income, just like that. And you don't have to think about increasing the size and the dollar amounts. You can keep doing the exact same thing. Let the copier take care of the doubling and the position sizing if you have a larger account and you want to proportionally scale it up and trade with roughly the same size that you've been trading so you can eventually hit those profit targets in due time. I'll leave a link to Traders Connect down below. Also, if you want a place where you can track, journal, and log all your trading data, I will also link up TradeZella. Highly recommend them. I use them for everything when it comes to journaling and tracking all my trades. Thanks so much, guys, and I'll see you in the next one. Peace.